Hey there, welcome back to our channel, Finance Experts. After a series of videos regarding financial methods, safe investments, how to reduce overspending to improve investment, and many more knowledgeable videos, we are here today to discuss one of the most valuable and currently occurring situations in the world. So keep in mind to stay till the end of the video to get the best knowledge and guidance on how you and your investments should behave in an inflation situation. First of all, let us take our eyes to the main key determinant on what is inflation and what are the main effects and damages caused to the economy by inflation. The term inflation describes a long-term, extensive increase in the expense of goods and services throughout the economy, which reduces both consumers' and companies' purchasing power. In simple terms, the United States dollar, or whatever currency you choose to pay with, will not buy as much today the way it did previously. Take a regularly used commodity and evaluate how much it costs over time to better understand the consequences of inflation. For instance, the price of an apple increased from 25 cents in 1968 to $1.59 in 2018. Therefore, in 2019, you probably purchased approximately 3 apples for $5 as opposed to 20 in 1971. This situation is considered inflation, which is simply referred to price rises throughout an industry such as shopping or the automobile industry, and eventually the overall economy of a country. Inflation is not only price increases for a particular service or product. The yearly rate of inflation of an economy that is prospering normally ranges between 2 percentile points, which economists view generally as a sign of good pricing stabilization. Whenever inflation remains within acceptable limits, it may also have a good impact. For example, it could boost spending when an economy is starting to slow down and requires a push, which will increase the desire of overall productivity. On the other hand, when inflation increases faster than wage growth, it may be an indication that the economy is in trouble. Do you know inflation might affect all sectors with great value? Now let us discuss some of those effects and changes caused in an economy. Customers or households are the ones who are most immediately impacted by inflation, while companies are likewise impacted. Here is a short breakdown of the ways that customers and businesses are impacted by inflation differently. When the cost of goods they purchase, including food, electricity, and fuel, goes up, households or individuals will have less purchasing power. Whenever prices rise for manufacturing components like raw materials, including petroleum and coal, as well as intermediate level products like cloth, steel, and finalized machines, firms will lose purchasing power while also running the danger of having their earnings diminish. As a result, organizations often expand the cost of their products and services in reaction to inflation, with the result that customers will have to pay a higher cost. The challenge for many businesses is to find the right equilibrium between enhancing prices to cover increases in input cost while also making sure that they don't go up too much, thus decreasing demand. Inflation will also affect the value of your investments drastically, because inflation will definitely reduce the present investments faster over a long period of time, because prices of goods and services go up very quickly. Over time, the amount of money saved or invested will go down as the number of activities you could do with those amounts of investments will go down with inflation. So as a result, we recommend you invest in high liquid assets in such an inflationary situation, as it will be easier to convert those assets into cash as soon as possible. Keeping your money invested in the bank might create some interest, but it will not be sufficient to complete the inflation effect. Inflation will indeed affect your investments, but it will solely depend on the type of investments. For investments with a fixed annual interest rate like bonds, as you receive the same interest rate each year, the investment will be a huge burden on you. As an example, if you earn $500 as interest each year, it will reduce its value each year with the inflationary effect. On the other hand, stocks will be affected in a different way. In this instance, companies will take steps to sell more stocks so that it will be a good impact to grow your investments. But there is another disadvantage caused by investing a lot in stocks. This is when companies pay for more employee wages, expenditures, and maintenance in this inflation situation, which will reduce the profits earned by the firm and will negatively impact your earnings. Investing in other methods like precious metals and cryptocurrency will work very well even in high inflationary situations. So, Invest a part of your earnings in precious metals like gold and silver, and also in cryptocurrency to help you stay strong in inflationary situations. If you consider an example, Bitcoins, an example of cryptocurrency, has raised its value exponentially over the course of time. You have the opportunity to protect and get the best returns through your investments by considering what your goals are and what your risk tolerance is. Try to go through all the videos we have done regarding investments and find the best investment method that will suit you during inflation time. Do you remember what we have learned in this video? Let's simply go through the key results of inflation in different instances. The decline in purchasing power. Precisely a result of inflation. A given amount of currency now has less purchasing power and could only be used to purchase fewer goods and services. The increased cost of the same goods and services they previously purchased for lesser money may have an impact on both companies as well as consumers. Rise in the expenses of existence. The expense of goods and services rises along with the cost of products. As a result, it could be harder for people and families to get by, which might lower their level of living. Impact on assets as well as savings. In the long run, inflation can reduce the monetary worth of assets such as savings and investments. The exact worth of any savings account with the investment will fall if the annual rate of inflation grows faster than the percentage of return on those accounts or investments. Impact on rates of interest. Even though monetary authorities fight against prices, interest rates may rise as a result of inflation. This may make borrowing money more challenging for people and companies, which might hinder progress in the economy. We hope that all our audience has received a very good understanding of what inflation is, its effects, how it affects your finances, and also how to stand strong in front of huge inflations with a strong investment plan by selecting the best investment option at the inflationary situation. Thanks for being till the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching, and we'll see you in the next video.